Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Theta. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right-hand corner of the screen. And without further ado, let's get straight into the TA. So Theta has been on a bit of a roll here. As you can see, we did print our local bottom October 21st, and that's actually when I uploaded my latest update on Theta. And since then, we've been seeing this nice pump, and we are actually up 34%. And we're seeing a bullish cross with the 20 EMA crossing above the 55 EMA on the daily chart. Things are looking pretty good. We had a little retest of the EMAs here with this little wick on November 2nd, actually. We're already in November. Wow, time flies by. And I do want to mention that we did not see a dip for crypto after the Fed announced that they're increasing the interest rates by another 75 basis points. And to be honest, I was expecting a pullback, not a significant one for that matter, but I was expecting some sort of a move to the downside. And granted, we did see some sort of a wick down. As you can see, this was the wick, but nothing significant came of it. And crypto really doesn't care anymore. And that's very good. That's great news. And I do have to mention that we're getting the inflation data coming out November 10th. So look out for that. That may be where actually crypto does take a little dip down. But yeah, no one knows. Maybe crypto doesn't care about that as well. And we see a move to the upside regardless. So like I said, a bullish cross here, the 20s crossing above the 55 EMA. Things are looking good on the daily chart. We just broke out of this channel down pattern, as you can see. So typically with channel down patterns, you are going down and down and down until you start breaking to the upside, and that's usually what happens with channel down patterns. You keep retesting the resistance until you're not, and this time over here, we broke above it. We retested the 20 EMA and the 55 EMA with this wick, so things are looking good, and our next target is going to be at $1.40. So even if we do get to $1.40, and from there we see the dip after the inflation data comes out, and we roll over, that's still not very bullish long term because we're going to be printing a lower high. So we're going to be below the August low here, or the August high, I should say. Now, I do want to say that some cryptos are actually breaking above this August high here, which is very bullish. I think Polygon Matic is doing that, and Injective is doing that at the moment. And I have both coins, very happy with those. So, even if we start breaking above this, we can set up some targets to the upside. And how do we do that? With the good old Fibonacci retracement. So we take the low that we printed October 13th, and we take the swing high in August. And let's see what are the targets. So right now we haven't even broken above the golden ratio at $1.34. So that is going to be a very important level for us to break through, because if we don't and we get rejected from the golden ratio here, that's effectively a dead cat bounce, because you print the high over here, you retrace down, you print the low, you start retracing up, you get rejected from the golden ratio, and that's a very strong sign that you're either coming back down to 91 cents here, or you're going to go even lower, because if you fail to break the golden ratio, that's the thing that you should expect. Granted, that doesn't happen all the time because nothing is certain in these crypto markets and with technical analysis, but just saying that if we fail to break through the golden ratio, then things aren't looking very good for Theta unless Bitcoin decides to start pumping like crazy in November. And we've seen that happen in the previous years as well. And we've seen October as a bullish month in the past 3 years, but October wasn't really bullish this time around. So let's see if November can change that, and we can stick to our traditions and have a bullish November for ourselves, with a potential pullback happening sometime in November, or at the end of November, December, or January. So let's say we start breaking above this high in August. You're going to be looking at your minimal target at 1.272. That's going to be $2.03. Then you have the 1.414, that's going to be $2.22.5. And then you have your 1.618 at $2.53. So if you're looking for swing trades, I would be very careful selling right now. Even though we were pumping, I wouldn't take profits because, like I said, November is typically a bullish month. We cannot discount that. So maybe you take profits here and Theta absolutely blasts off and moves to the upside. So you don't want to be left down here with your cash. And zooming out a little bit more here, I want to show you this resistance trend line that we have. So I'm going to switch the color of this trend line to pink or burgundy, whatever you want to call it. And I want to show you that we've been retesting this support trend line since May of 2021. We had another retest in July last year. Then we had a fake out below twice here. If you go to the weekly chart, it's better seen on the weekly. But the thing is, since we lost it in April and May this year, we haven't seen the back test of resistance. And potentially, this is something that we can expect. So a move all the way up here to the pink trend line, and that would effectively be the same area where we got rejected last time in August. So this would be a double top pattern, which is a negative pattern. And if you lose the low here afterwards, you're going to have a very, very sad target to the downside, potentially taking us to the 2.272 here. But that is, that's not 100%, right? We don't know if that's going to happen. Just letting you know all of the possibilities here. So like I said, if you start running all the way into the burgundy trend line here, that's where I would take some profits for a nice juicy swing trade, because at that point I think the RSI would be very overbought on the daily, on the 12-hourly, and on the 3-day chart. And those are important to keep an eye on as well. Now, the larger Fibonacci retracement is set up as I always have it, from the swing high here in April last year to the swing low in July of 2021. We almost got to the second fib level of the large fib, and that is still our target at 80 cents. So in case of a capitulation, in case Bitcoin drops to $12,000 for whatever reason, you may look at that level at 80 cents as your, golden entry opportunity for Theta. Now, jumping into the daily RSI, you can see that we're breaking out of this symmetrical triangle, and we've seen this very, very strong uptrend after I uploaded the video. So, I don't know if it was because of my video. I highly doubt that, but it could be possible. And as you can see, we had a little bounce off of the buy zone I had for you on the RSI on the daily. So anywhere from 34.8 to 27.3. And we just bounced off of that October 14th. And since then, we've been in this nice move to the upside. We actually got overbought on the daily. We moved back down below the yellow trend line, and now we're back above it again. So if we end up here before November 10th, I would say that that would be a good time to swing trade, okay? Otherwise, I wouldn't risk it because it's just not worth it. The $50, $100, maybe $200 that you're going to make off of that swing trade, those aren't going to be worth the actual profit you're going to make down the line if you just hold, okay? So just be aware of that. I've been caught up in this so many times, and I've made mistakes so many times, and I'm just trying to help you out here. Now let's switch over to the Binance website. All right, jumping into the weekly chart on Binance. So I do have a different setup here with my trend lines and the Fibonacci retracement. So here you can see I have a descending yellow support trend line. And as you can see, if I just bring, where's the brush? There we go. If I highlight the touches here. So you can see that we bounced off of this trend line once again, just like we did in June. And we're seeing a move to the upside here. So the 20 weekly EMA is going to be your target for now, and that's at $1.33. Still, I wouldn't take profits there. If you're entering for a short to mid-term trade and you potentially entered off of the yellow trend line and you're looking to get out of Theta, yeah, the 20 weekly EMA is probably a very good resistance level to sell. The next level would be at $1.49.5, and the next one would be at $1.71.5. So those would be your levels. Obviously, this Fibonacci is set up with the targets to the downside. So if you start losing the 96 cents support that we had here, okay, you're going to see a move to the downside. Actually, we should actually switch that up because we did lose the low over here in October. So I should update the Fibonacci retracement. Let me just quickly grab this and we can just bring that down like this, right? And then you have the 1.618 moving down a little bit at 62 cents. So that's what we have on the weekly. If I jump into the weekly RSI, you can see that we're breaking out of this falling wedge and out of the channel down pattern. So immediately just look for the next swing highs, and those would be your major resistance levels on the RSI moving forward. So you have your immediate resistance above you over here at the index of 47.9, call it 48 roughly. And we have a level above that sitting at 54.2. So potentially if Bitcoin starts, an aggressive uptrend here, Theta could take out those targets and have a retracement sometime down the line within the next couple of months. But like I said, I still don't think this is a reversal into the bull market. I think that's going to start happening in spring of 2023 when we're actually going to start printing higher highs and higher lows and building towards the bull market in 2024. A lot of things can change by that point, obviously, but this is just what I'm expecting based on logical conclusions, based off of the large economic picture that we're in right now and the financial crisis and the energy crisis, and all of those things should settle down towards spring. That's why I'm expecting a nice move to the upside towards the end of 2023. But for now, I wouldn't be dollar cost averaging into Theta. I would wait after the inflation data is out because potentially we could see a move to the downside afterwards. And like I said, if we don't break the August high, then this is simply a lower high that we're printing and we're back on our way down, potentially retesting this descending yellow trend line once again in December or at the end of November here. So look out for this high. That's very important for us to break. And if I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to check out my Patreon. And I'm going to catch you in the next one.